How we doing? How we doing? Today is Thursday, the 25th of July, 2024. Just doing a real estate tap in with you for today. So, got some economic data that came out. It says that the economy is growing at a higher pace than what is thought. So that's gonna, have a significant role in whether the Fed cuts rates or not. If the economy is growing and the Fed cuts rates, that means that there's a problem. That there's a problem underneath, or under the hood, so to speak, with the economy if they do that. So it's going to be interesting to see, what they do. But either way, it is going to have some effects on real estate. Depending on, if they cut the rates, you probably see more people maybe coming into the market to buy, along with, we'll have to see if that increases the supply of houses. Usually, if rates go up, people, tend to sell. But this is an unusual situation that we're in. So maybe the rate cut may force more people to sell their home because they will maybe potentially need to buy another home. So if they see the rates going down, they may feel like it's a good time to jump in. But data shows that the opposite is true a lot of times, is that as rates increase, more sellers come to the market. And we're starting to see more sellers come to the market in a time where, things should be slowing down. So overall, it's just kind of hard to gauge exactly where things are going to be and what is going to happen. If unemployment continues to tick up, you're starting to see, that continue to go up. And, a lot of these companies are starting to, slow down in terms of, what their revenue, what their economics of the companies are looking like is starting to slow down. You're seeing businesses close. So you have a couple of different, a few different things coming together, and it is going to affect the housing market. I feel that, obviously if the unemployment continues to tick up, you're going to see more houses come on the market at a time where, usually things start to slow down. So between now and the first of the year, it's going to be very interesting to see, what developments happen. But I'm expecting things to kind of, go in a downturn, even though it is close to an election. I am kind of seeing that things are going that way. There's a lot of stress in the economy on businesses with these higher interest rates. And that, is only going to lead to, companies laying off people. And then obviously if you lay someone off and they own a home and they feel like they have tons of this equity, it is going to come on the market. And will the demand be there to purchase it? And if, like I said, if they do cut rates and we get more demand, are people going to be a little bit more picky about which house they do buy? But we always try to bring this back to real estate notes. If you know how to create a note, understand, the buying and selling of notes, we can be a solution for a lot of people, because a lot of these people purchased within the last 4 years. During the pandemic, that's when, the pricing got really out of whack. Things skyrocketed over that time period. So some of those people, may lose their job, may have some distress, and we could be in a position to help those people, at that particular time. Because the deal now, what you really want is the interest rate that a lot of people do have. A lot of people have low interest rates, 2, 3, 4% interest rates. And if you can, get that, in this high interest rate environment, that's where the deal can be made. And then you can turn around and try to make people homeowners, once you control that low interest debt. Or if you have a property, own it free and clear, or you're looking at other opportunities in the market to be able to create the financing for buyers, is going to be a big thing, because with all the other economic factors that we talk about, banks are going to probably pull back somewhat in terms of lending. They have a lot of exposure on the commercial side of real estate, and with all the rules and regulations and things like that coming into play for banks, they have to be a little bit more conservative on the residential side in terms of giving loans. You're going to have to be an A to A plus type of buyer for them to extend a loan to you most times. If you do get one of those lower interest loans, there's going to be a lot of fees and things attached to it. But again, if we kind of see increased people getting laid off, or people in that lower income, middle class, so to speak, are they going to be still in a position to buy homes at that particular time? Because a lot of times, when there are layoffs, when the layoffs start to increase, or a recession, it kind of hits the lower to middle class, especially hard. So again, if you can understand how to create a note properly, maybe that there are people out there in that middle class that you can extend home ownership to, as opposed to being a renter, dealing with all of the issues that renters have. So a lot going on. Market is shifting. It is probably going more towards a buyer's market. We're headed that way, and with a possible recession looming, and some people would argue that we've already been in a recession for some time. But until they officially say that we're in it, and we start to see the the more dire effects of a recession, they don't people don't feel that we're in a recession. So just think that understanding notes, learning notes during this particular time is gonna help people navigate the time, and then still do well based on their investments. Whether you have a primary house or an investment piece of property, and things start to happen in the economy and you look for something to do, understand seller financing and notes is going to probably be a good solid solution to whatever real estate problem you have. So anybody wants to talk further, please reach out. Telephone number is 973-475-8488, or you can shoot me an email at investorgmr@yahoo.com. And if you have any questions or want to talk, we can answer questions there as well. Okay, everyone, have a good one, and we'll talk to you soon.